Good morning. Welcome to Zambia Block Talk Radio Sunday Business Show. My name is Roger here in the prairies where it is cold, actually, -2, like it's supposed to be spring. So, Levi, I am not sure what is happening in the prairies. Anyway, no one forced me to come here. I came by myself. I shouldn't be complaining. Welcome, everyone. Brian in Middletown, welcome.
Thank you very much for having me.
Yeah, thank you. Levi, in Newark, you remind me of my village there.
We're good. It's a little drizzling out here. But
Yeah.
Glad to be here.
We're good. Yeah. Wherever you are in the UK, our friends in the UK, in Zambia, South Africa, in the USA, in Canada, and all over the world where you are watching us, welcome. This is your Sunday business show will be coming live every Sunday. We hope so, at least for 1 month, until every one of you starts to put some money, start making money on the stock exchange. So coming up live, Brian is going to, remember last week we talked about stock options, but we are reversing just a little bit. We'll go to stocks. They are different. The stocks today. Brian will go to the stocks. Some of you who are in the cryptocurrency world, you are kind of shaking because the cryptocurrency has been shaky. Yeah, we'll look at those stories. What is causing those markets? And probably we'll also discuss our holdings, our positions. How have they been performing this week? So stay tuned. And we had a lot of feedback from Zambia. People, Levi, have a problem downloading the Binance platform. So we'll see how we can help from there. Yeah, Brad.
All right. So this has been a fun ride, and the intro music actually kind of put me in the mood.
You know what I'm saying? You know what I mean?
Yeah. So today we'll talk briefly about the stock market and the things to look for, and basically if you're starting out, just to gain a bit of understanding of what the stock market is, what stocks are, what IPOs are, the kind of information to look out for when you're trying to buy into a stock, and we'll of course go through a trade. This is a weekend, so the trade wouldn't even go through. So yeah, we'll talk about things like that. So yeah, to start off, so when companies start out, they all start out private, until they've proven their business model or proof of concept, and then eventually when they start seeking to grow the business and to get more financing, especially when they can't get financing from banks, they seek to go public so that the general public can get a piece of the pie, so to speak. So, and that's where the IPO comes in, and IPO is basically just an initial public offering where this private company is taking itself public so that it can be traded on an exchange, like New York Stock Exchange, NASDAQ, whatnot. So then we'll talk about stock. So what is a stock? So in a layman's term, a stock is just a piece of the pie. It's a piece of the corporation that has gone public, and it's available to the general public to buy into the company. So with an IPO, the company sells it. It divvies up its company itself and sells those shares to maybe like an investment company that will take the company public. But that's the only time that particular company will get money from the sale of, get the proceed from the sale of the stocks. So then once the stocks start trading on the exchange, the exchange of money is between investors that are buying and selling the stock. The company does not participate in that business or platform, except for people that are insiders that own stock in the company. Right.
Not to cut you short, Brian. Let's have a company named maybe, I don't know.
That Tesla.
Macaroni Bakery wants to raise money.
Macaroni Bakery wants to raise money.
Yeah.
So, they've been in business for a while. They've been private. Now they want to go public and, sell 1 million shares to the general public. So they get that lump sum of money for them to invest in the business and grow the business. So once those 1 million, 100 million shares start trading on the exchange, it's you and I that will benefit from, the sale or buying of that of the stock as the stock price moves up, right? So we're getting a piece. You and I, well, not you, Levy and I are getting a piece of, because you own the company. Levy and I are getting a piece of that company. So that's what trading on the stock exchange or stock market does. So the exchanges that are available, especially in the US, is the New York Stock Exchange. We have NASDAQ. We have Amex, which is American Stock Exchange. In Canada, we have Toronto Stock Exchange. And then in the US, we have the over-the-counter. So over-the-counter exchange is a list of stocks that are not actually on the main exchanges, because there are certain requirements that have to be met for a stock to be on the main exchange. So we'll go over at least one of the requirements, so that you're on the lookout when you're buying into a stock that's on one of the main exchanges. So these are some of the requirements that have to be met by a company that's trading on some of these main exchanges like New York Stock Exchange or NASDAQ. But my point of interest is on the $3 minimum price for the stock, right? So a stock has to be trading at least above $3 to meet that requirement to be on that New York Stock Exchange or NASDAQ. So when you're buying into a stock and you see a stock that's $1, there's a likelihood that that company will be deregistered from the main exchange. But then for some companies to stay on the main exchange, they will do what is called a reverse stock split. So what that does is, say you bought 100 shares of Macaroni Bakery, right? And the stock price is at $1. So when they do maybe a 2-for-1 reverse stock split, what's going to happen is the price of the stock will go up to, let's use 4-for-1. The price of the stock will go up above $3. It will be $4. But then the number of shares that you'll be holding will now be 25, because it's a 4-for-1 reverse stock split. So then, an issue comes in. You've already reduced your number of shares because of that split. But then what if the stock price drops again to $1? Now you had $100, now you have $25. So you have to look out for things like that when you're trading stocks that are, below a certain price, like $3. Here is Tesla. This was a price at 2 p.m. Eastern time on Friday. It was trading at $728. So I picked Tesla because Tesla is one of those companies that just love, right?
I hate Tesla.
Yeah, I just love it. I just love. I've test driven a Tesla, and just the feeling is like amazing, So some of the things to look out for, like concerning stocks, is when you hear about volume, what does volume mean, right? So volume is basically the number of total shares that are being traded on that day, whether it's buying or selling, right? So if I bought 10 shares and Levy bought 10 shares, the total volume is 20 shares being traded that day. And why is this number important? It basically kind of tells you about the liquidity of the stock, right? If it's less traded, if it's traded very lightly, it means that if you're holding that stock and you want to sell it, there are no willing buyers on the other end, that will buy into that stock. So you have to be careful that the stocks that you're getting into have a high trading volume, be it it depends. Some go as high as 20 million shares a day being traded, right? And then we go to market cap. What market cap means is, so you see right here, Tesla on Friday at this time was $723 billion. That was the market capitalization for Tesla. So what this basically means is you take the outstanding number of shares that Tesla has issued, right? And you multiply it by the current stock price. That's how you get the market cap. So you have to also look at this because, if I go and find a stock and I see that their market cap is, $800,000, I'm like, something is, this is too small of a company for me to invest in. What's the likelihood that this company will take off? So you look at things like that. When you look at float, right? So what float means is basically that so when a company issues stocks, right? The total number of shares issued, that's the outstanding number of shares. However, within that outstanding number of shares, there are insiders, that people that work for that company that hold stock, right? They have options on when they can sell those shares. But the difference between the outstanding number of shares and the shares held by insiders is what is known as float. So the float comes into play when you're looking at the supply and demand, right? So if a company has a float of say 1 billion shares and the price is at $1, what you should keep in mind is what's the likelihood that this stock will get to $10? Looking at the size of the company. So to me, a company with 1 billion shares and it's a penny stock, that's a red flag, because there is too much supply for that stock that it will not allow for even when the demand goes up, it will not really push the price up because there's so much of it on the market. So the price will very likely stay low. So those are some of the things, and I'll show you where to get this information. It's available on any stock that you pick on Yao Finance. Yao Finance is the easiest to use. And the page that I'm talking about is this page. I'll show you how to get there. So you look at the average trading volume for 3 months for I think this was Tesla. I forgot which company I used, but maybe let's say it's Tesla. It's 37 million shares traded within 3 months. So that's a good number, right? You see here that the shares outstanding, it gives you the shares outstanding. It gives you the float. So you see there's a difference between the outstanding shares and the float. It just tells you that the difference is held by insiders. And it gives you the percentage that is held by insiders, percentage that is held by institutions. And this percentage held by institutions also plays a key role in the sense that you now begin to see what big companies are invested in this company. That helps you determine somewhat how much due diligence these companies have done on this particular company for them to invest, because they have the big Benjamins behind them to do all the due diligence that they need to do, right? And then here, it shows you the shares that are shorted for that stock. So shorting a stock is a bit more advanced for someone that is just beginning, but basically it's borrowing shares and not money. Borrowing shares, and you turn around and sell those shares, and you start waiting for the price to drop so that you can buy back those shares and give back to the person that you borrowed from, and you keep the difference. So that's what so this actually, Tesla at one point was the most shorted stock, and this also is what was happening with GameStop. If you saw that frenzy with GameStop going up with the Wall Street bets, betting that they kept on buying so that they could squeeze out the short sellers, and then the short sellers were forced to buy back because they didn't want to lose so much money. And that was a bit more complicated for someone that is just starting to understand, right? So here is NEO. NEO is also one of my babies.
Yeah.
So this is a page from Yao Finance, right? So you have to look at a stock's history at different times. Like you hear the phrase that history repeats itself, right? And that is true even with stocks. You have to, it gives you, the range. I'm looking at 1 day, I'm looking 5 days. What happened a month ago? The graph will show. Year to date is just at the beginning of this particular year up to today. 1 year ago, 1 year back from today, 5 years, and maximum. If you look at this stock, right about here was $3. That's when I bought it, and I'm still holding it. So you see the movement. But then I always tell people that your character is built in the time, and that's why I put in these red dots, right? Your character is built in the troughs of the graph of the stock, right? What are you going to do when the price goes down? Are you going to hold? You know what I mean? Can you imagine if when it went down here, when it was red, if I had sold because I was scared that it was going to keep going down? So I held on. So I'm still holding on. So you can actually have an idea of what the return right there is, right? So here are a few trading apps that you can download on your phone to get involved in trading stocks. And this one thing that Levi said always rings in my mind. Nobody owns the stock market. It's for everybody to jump in and swim. At least you just have to have the basic understanding and the desire to do it, right? Robinhood is one of the easiest. We're going to use Robinhood to, kind of mimic a trade. As you get more advanced, and these are not like complicated to get into, but you start with Robinhood. The problem with Robinhood is some of the stocks are not available on Robinhood, and they'll be available on these other trading platforms. These are the apps, the trading apps that I looked up for people that are in England.
Okay.
And the one of them, Interactive Brokers, actually, I found out that for people, I'm not sure if it's just England, but for people using Interactive Brokers, it gives them a chance to actually trade on the American exchanges, so they can trade stocks as though they were in the US. Yeah. Some of the terms that we'll go over when buying a stock, some of the terms that you need to be aware of. Market order. When you're buying a stock and then there's an option that it's market order, that basically just tells you that you're actually going to buy that stock at that current price that it's trading at, right? I have never used market order because I always feel that it's a bad idea. Limit order means that you set your own price, right? If Tesla is trading at $750 a share at a certain point, right? Yeah. I'm like, I don't want to buy Tesla at $750. I'm going to buy Tesla at $740. So I set the price at $740 and I close the app and I walk away, right? When Tesla drops to $740, my order is going to be filled. I'm going to buy into Tesla, right? So I'm determining my own price, what I feel is comfortable for me. Stop limit order. Basically, this you can use to mitigate, how much you want to lose in case a stock starts going down. So if I buy Tesla at $740, right, and Tesla keeps going up, but something happens in the market, I've already set a price that if Tesla drops below $740, maybe it goes to $735. If something drastic happens, I want that trade, I want to get out of that position. So you set it and you forget. Because what happens with this, the price movements of stocks is so quick that you can't keep up unless you have, a trading platform that you're always there, or you have automated the process of selling. So this kind of helps in automating the process of selling. Stop loss. Well, stop loss is what I actually just talked about. But then stop limit order is a combination of the stop loss and the limit order. I have never used this. I've used this and that. I do not like the market order. So that's that on that one. So this is a common phrase in trading stocks, in investing, right? So we're going to, from here, we're going to do a trade. And so it says cash is trash and savers are losers. This
Cash is what?
Cash is trash and savers are losers. So when you're saving money, you're losing money because of inflation.
Yeah.
So you need to be able to invest in something, even just an account that is earning interest. Otherwise, what you're saving is not what you're going to have at the end because of inflation.
Yeah.
And this is my daughter. This is my daughter's class. I actually did a stock market presentation to their fifth grade class, and it was amazing. So I just kept this here. So now let's get into so this is Robinhood. I have Robinhood, but there's no activity in it. I don't hold any stocks in it, but I have it. So I'm going to use it to kind of mimic buying a stock, right?
Yeah.
So let me use Apple for argument's sake, because most people know what Apple is. So Apple on Friday, it closed at $134.
So Apple is not expensive, why?
So Apple was actually $400 and something, and then they did a reverse split.
Okay.
Well, they did a split and a 4 for 1, I think. So the price dropped. So and the reason why companies do these splits is if a stock goes up too high, like Tesla did. Tesla was in 2000 and something. They want more people to get involved in buying and selling. So they do a split so that the price is lowered down, and more people can get into it. So this is Apple. I'm investing US dollars. I'm doing a buy, and say I have $1,000. Now the good thing with Robinhood is that it allows you to buy fractional shares, whereas other platforms
you have to buy the whole thing.
You have to buy the whole one share, right? So, and then I have to choose. You see, this is what I was talking about earlier. Market order. I don't want to buy Apple at 134, right? I want to set my own price that I'm comfortable with. Maybe I only have $130. So I'm going to go to a limit order. You see this field opens up and it tells me, asks me what price I want to buy at, and I'm saying 130, right? And I want to buy, 100 shares. That's $13,000. So say I am so convinced that Apple will drop down to 130, right? It may not be today, but this tells me that this order that I'm putting in is going to expire today. I can change this to good till canceled, till I actually come in and physically cancel the trade.
Okay.
Right. And then here there's a checkbox that's saying allow this trade to execute during extended hours. So the stock market is open from 9:30 to
the
American time, Eastern time actually, to 4 p.m. Eastern time. But then there's trading hours after 4 when the market is closed. It's called after hours, right? And there's also trading time before 9:30 for people that are good at it, right? I think it starts maybe at, let's say, 6 o'clock in the morning to 9:30.
4 a.m.
4 a.m. Right, 4 a.m. So the checkbox, I'm saying, let this trade execute even outside the normal trading hours, right? And then I can review. Well, because I don't have money in this account, I just have it. I don't use it. it tells me that I don't have enough buying power. And this is going to happen even with a regular account. If there's not enough money in the account, it takes, the money that you're trying to trade.
So just back up right there, Brian. That's
Right.
a good point. When you open your trading account, tell the listeners how you fund your account.
Right. So when you open your trading account, you can connect your regular bank account to this trading account. These are legitimate trading platforms that, they are regulated by the government. They're just like regular banks, but they allow for trading in the stock market. So you connect your bank account or you use your debit card to actually deposit money into any one of these accounts. For those that are starting out, it may take 3 business days for your money to be available in the account. For a person like me that's been doing this for a while, the minute, depending on the value of my account, the minute I transfer in $1,000, it's available right there and then for me to trade. So that just depends on how long you've been doing it, how big the account is, and things like that. So then it gives me the option to deposit funds into the account for me to be able to buy into this trade. So basically, this is, in a nutshell, this is how this works. It's very basic. There's nothing scary about it. Anybody can do it. Even my kids now, when people send them money on their birthdays, they buy stocks because they are so young that they know that in 20 years' time they will have so much money.
Yeah.
Then here this is live, right? This is, well, not live in the sense that the market is not open, but I can go to Yao Finance, search for a stock that I'm interested in, and then here you see, there are conversations. There are people that talk about what's happening in the market. People that are invested in this stock. So when I click on it, you see live, like when it's trading, when it's on an actual day, you see live conversations. Statistics, this is a page that I showed earlier, that gives you, pertinent information, float, outstanding shares. If you're a person that is involved in a lot of fundamentals about a company, you can look at their financial information. I don't really look at a lot of financial information for simple reason that there are so many companies that are doing so well on the stock market, but they've never made a profit. What else? You look at the holders of the stock, it will tell you, like right here, these top institutional investors, these are well-known companies. They've invested so much money. So right there and then it tells you they've done their due diligence. There's no way they can invest $40 million in a stock that they don't have any information about. Top mutual fund holders. So this all gives you all the information that you need. All you have to do is just do a little bit of research and boom, you're good to go. I was talking to somebody about this stock yesterday. I think I mentioned it on the show some time back. I bought into this. Let me see. I bought into this at about $1. It went up to, I think, $3, and I sold back at $2.50, and I'm out of it, waiting for it to go down to maybe 50 cents, and I'll buy back into it. So it's just as easy as that. Yeah, so that's I think that's a lot of information to
yeah, that's a lot of information for a lot of people to make them run away, as always. But that is not our aim. Our aim is to make it as simple as possible. So number one, from Levy's point of view, anyone, absolutely anyone, can buy stocks on the stock market? Levi, talk about that.
Yeah, as I said earlier, it's as Brian went through it, it's as simple as that. It's just that the question then begs is what will make me buy that stock? As you use the example of Apple, if I'm a rookie and I'm just starting today, what will make me want to buy into Apple? I might not know a lot about the stock market, but I see around. I'm using an Apple phone. All my friends have Apple phones. I see every time there's an iPhone 8, 9, 10, 11. Just with that simple basic information, I can be able to predict, okay, in the next 1 year, Apple will still be doing good. And I get in and place a trade. So it's not, it's not neuroscience or anything. It's as simple as that. Just conviction and belief and patience. That's all.
I mean, I like that because when you see a lot of these companies, we have McDonald's. These are places we go to eat. You have Walmart. These are places we go to almost all the time to go and shop. They've made it so easy, we can go there to buy. And yet we want to make it so complicated in our minds that you cannot own part of McDonald's. Let's make it so easy for ourselves when we see some of these places. I can own, wake up in the morning tomorrow, when you wake up, Zambian, African, brother, Black Americans, I can own part of Walmart. I can be part of Walmart. I can be part of Tesla. This is what we want to encourage. For the beginners, again, we'll post the platform, which is Robinhood. That one is so easy. They say it is very, very easy for the people who are beginners. If you are in Canada, we have Wealthsimple and Questrade. Questrade is another advanced one. Questrade, you pay a fee, a commission to trade. Wealthsimple is commission free. What about is it Robinhood? Is it commission free? Some of these things?
Yes. Robin. Actually, all of them are commission free. The only catch, well, I know Robinhood is free, but then with these other platforms, the trade has to be trading at a price of more than $2 for it to be commission free. If it's less than that, they'll charge you maybe $5 per trade, regardless of how many shares you're buying. Both when buying and selling.
But Brian, what I realize is that commission free also, comes with a catch.
Yeah, that's true. That is true.
I think Robinhood, they make their profits on the spread. Because
Right.
I remember before when I used to use Robinhood, you see maybe a price of the stock price is, let's say, $2.50. Then when you buy into it takes you at around $2.60. So they might say it's free in quotes.
Right.
That's why
right.
for me, I don't really look at whether it's
Nothing is free,
because
especially
at the end of the day, they have to be making some profit.
some money.
Right.
Yeah. Okay. So, Brian, since you're on the screen already, so what companies are you holding right now?
Solo is an electric car company. It's a Canadian company actually. I've had it for quite a while. I think I bought it at $1.70.
And right now it is $4.
Yes, it's actually even when it went up to, it actually went up to $13. You see here, it tells you the 52-week range. Even when it was at $13.60, I was still holding it. I didn't sell out of it. because I have so much hope because it's an electric car company. Either someone will come along and buy it, or the price will go up. When it goes to maybe like $20-$30, that's probably when I'll think of selling it.
You don't want to go.
Netflix,
Do they pay dividends?
no. I don't have any stocks that pay dividends. So companies that pay dividends are in the large cap, which is large capitalization, which is companies with a market cap of over $2 billion, right? You find that's where most of the companies are that pay dividends. This one, I first found it when it was actually 10 cents, somewhere around there. I didn't know anything about it. 2 weeks later, it went up to 90 cents. I got excited. I sold. Then I bought back, I think, at about 50 cents somewhere. And I'm still holding it because I know this company is very likely going to go to $100 a share because of they just had so the other thing that I didn't mention is that you look out for news on companies, right?
Yeah.
So Netlist enters into strategic agreements with SK Hynix. So the reason this happened is because SK Hynix had actually infringed on one of Netlist's patents. Netlist has a whole portfolio of patents. They actually right now are in litigation with Google. So they're expecting a huge payout from Google because Google infringed on their patent. So you look at things like that, like, when Netlist settles with Google, how much money are they going to get from that? That alone would drive the stock price up. And if you notice, it's trading on the OTC. When that happens, they will likely move it to NASDAQ, which will, because NASDAQ is a larger exchange, that will make this stock very visible and more investors will come in. That will likely push the price up.
Okay. Any bonds? Are you holding any bonds?
No, I just do stocks. That's it.
Why not? Bonds? Why not?
It's too much. It's too much information for my brain. I don't want to be in too many things. I just want to kind of concentrate on one thing, and this and a little bit of cryptocurrency. That's it.
Okay.
So stocks and cryptocurrency. Yeah.
Yeah. Let me maybe share mine.
Let me stop sharing.
Okay. Yeah.
And just a disclaimer: I am not a financial advisor. I just give my opinion. I just give my opinion.
Yeah. Before we go to before we go to Levy, this talk is very interesting. I shared last week. I share screen. Okay, where am I? I guess not. Levy.
Yes, please.
You want to share with us what you are holding right now and how they are doing?
Okay, I'm basically holding a lot of stocks, but if I can just break it down a little bit, I'm currently in solar, EV, cannabis, and genomics. So my if I can just share the ones I really like for solar, the past week, it's been like the stock market is, especially the growth stocks, which I'm heavily invested in. They look like they've started to come up because they were beaten down for the last 2 months. So the ones I have right now is, for example, solar. I have SPI. SPI, reasons why I own it is, as Brian talked earlier, it has very good numbers in terms of volume and outstanding shares. So it's a stock that really moves. When it decides to move up, it really moves up. And when it decides to fall, it also fall with the same vengeance. So I'm holding it because I believe I got it at
Which
a
one
good
is that?
price. SPI.
SPI.
SPI for
Oh,
solar.
energy. Right.
Yeah, yeah. Then for EV, I have the EV I love the most is HYLN, Helion. So what happened with Helion is when I was getting into EV, I did not have an idea about.
Sorry, Levi. What's the stock symbol again?
HYLN, Helion.
Okay, yeah.
Yeah. So what happened is when I started getting my feet wet into EV, I did not have an idea of which stocks to buy. I also have Neo. So I did not have an idea of which stocks to buy. So I don't know, as everybody does, I looked at YouTube videos, and I'm always looking for something that will catch my eye. So when this guy was talking about Helion, what caught my eye is they're in the truck business, right? But they're not building the cars. They're just installing a gadget to make the trucks more efficient. So the trucks can still be on the road and use gas, but at the same time they can be charged and use it's like dual. They can still use gas and electric. So what caught my eye with Helion was this thing can be adopted very fast, and it's just stuck to me. So it's always been a stock that I hold, or an option in this case. Then when it comes to cannabis, I have CLVR, Clover, CLVR, and ACB. The reason why I bought CLVR, again, intuition. They are based out in Colombia. That's where they grow their and
of course, Colombia.
their cost of production is 10 times cheaper than producing cannabis here. I heard that, I bought it. That's the only reason why I own it, and it rarely disappoints me. Then ACB, Aurora Cannabis, I have it for the sole reason, as you explained, Brian, the volume and the outstanding shares. It moves a lot, and it's in the cannabis sector, so I know at some point it's gonna shoot up.
Right.
Yeah. Then genomics, there's one I really love, is called BNGO, the ticker symbol, by Nanogenomics. Why I got it is there's another genomic stock that's called Pacific Bio, PACB. Pacific Bio was in the 30s, $40 a share. But when BNGO came out, they were claiming that their product is better than Pacific.
We're losing you there.
Can you hear me?
No, I
Yeah,
can
we can
hear
hear
you,
you now.
right?
Yeah.
I think it's your audio, yeah.
Yeah, so I got BNGO because when it came out, they were claiming that they have a product that's better than Pacific Bio. Pacific Bio is in the ARK. We talked about ARK Invest the other week. So it's in the ARK Invest portfolio, and it was around $30-40. And BNGO came out when I first heard about it, it was around $2. So that's why I got into BNGO.
Okay. Mine, I think you can show it, Brian. Like last week I said, I like the way this stock has been moving. Vicinity Motor Corp. What is the symbol? Just Vicinity. VMC.V. VMC.V. Bachavara, yeah, welcome.
Yeah.
Brother Jonathan, welcome.
I think my connection is not.
From Nairobi, someone watching from Nairobi. That's wonderful. Makes you miss home now.
Nairobi.
Yeah, Brian's. I think it's a one. I don't know if it's the one which is making that noise, but now he's gone, so we don't know. what has happened to him.
Yeah, even
Uh,
it kicked me out at some point. There must be a problem with the connection.
Yeah, that's a problem with StreamYard, especially people from Zambia or Africa. It really kicks them up. What is someone saying about the Bidens? This is now the Bidens. What are they saying? Biden administration is big on clean energy. Anything you are looking at because of this? Yes, my VMC actually. My VMC is a motor company which makes electric. It makes electric buses. So we talked about this last week, and some guys here have talked about it. Green energy stocks, to me, they are going to be very hot, and everyone agrees. So the stocks, those are my beginning stocks I bought, was VMC, which is a motor company, which is based here. They make electric buses. I hope, Brian, are you able to see the VMC? Or you are in trouble there? Your thing is dropping.
Yeah, it was dropping. I don't know why it was dropping, but
yeah. Yeah. What do you think, Levi, about this clean energy?
Yeah, green energy most definitely in the future. As we said the other day, like in 2030, they're expecting California. There won't be a gas a gas driven car. And the Biden administration, is giving a lot of rebates, a lot of pouring in a lot of money into the sector. So I have a watch list. I don't know if you have a minute, I can be able to share.
Okay.
For my
interesting, yeah.
My green
as
energy.
you prepare, interesting for those watching from South Africa and Kenya. Those places are very active stock markets. So please find out. I'm not sure if you can buy stocks online or you need a broker. Last week we talked about MTN. MTN will be going live with 5 billion valuation. Let's not just be making these companies rich, but let's have part of the pie.
Right.
Yeah.
So the ones I'm watching is there's GEVO, GEVO.
Okay.
Then there's depending on how much money someone wants to invest in. The better one is ENPH, Enfase Energy. They have very good numbers. Then there's RUN, RUN.
Oh, you're not able to print them, eh? I could have printed them. Let me put here Levy's picks. Levy's picks.
And I'll show you the ones I'm investing.
Are you able to share your screen?
Are you sharing the screen?
I don't know. Is that way I can be able to type? Because I'm using my today I'm on my phone.
Oh, okay.
Yeah. So I have Polar Power, POLA.
That's a good one.
Yeah, and these are good if you like risk because it also moves very fast.
How much are they? How much are they?
Polar is at it closed on Friday at $10.90.
That's not bad.
Yeah, and then there's VVPR, Vivo Power. That's for a risk taker like Brian. It has very low float, so it moves very fast both directions. So I
with Polar, the one you said Polar, are you just watching them or you're already in?
Yeah, I'm already in, and what happens is, like, sometimes I try to mix my portfolio. So there are those I go with if the company has a good story, I might buy into it. And sometimes I just, because as I said, I started as a day trader, so I can look at I look at the numbers Brian was talking about, the volume, the outstanding shares, the floats, and I can be able to almost tell if a stock will move, and the history too. So I can be able to tell if a stock will move up very fast. So I like that that risk aspect too in my portfolio. And that's why I'll say again, this is not financial advice. But the NFS, ENPH, and RAND, those are solid. I always try to get one or two solid stocks, but I also like to mix it up with with a bit of fun in there.
Yeah.
The other thing that I should mention here is that, especially for those that are in the US, so there's a difference between investing in the stock market and being a day trader, right? Being a day trader means that you're buying into the stock same day, selling out. You don't keep a stock overnight. So then there are rules that govern that level of trading. If you're just a regular person, you can't be buying you can't be doing like more than 5 trades or so within a week. Otherwise, you'll be tagged as a day trader. At which point you need to have $25,000 in your account. It's one of the requirements.
YouTube, yeah.
So those are things to look out for. The other thing to look out for is that when you're in a trade that you've held it for less than a year, right, and you sell out of it, the tax that you're going to pay on that profit will be your regular income tax, which like say for me is 35%, right? But if I hold the stock for over a year, then I'll pay the capital gains that I'm going to pay on that stock on that profit actually is 15%. So those are things to look out for when you just can't go in blindly and otherwise you'll be hit by Uncle Sam and then you'll be surprised that what did I do wrong. So those are things to look out for as well.
Yeah. There is also something interesting a co-worker told me today. Now I've become such a stock market expert. People are coming to me at work in quotes.
I need a commission from that.
Well, the interesting part this person told me was, number one, you know how we pay interest, property tax on our homes.
Right.
Property tax, if you had I don't know if it's a good deposit, the bank allows you to pay your own property tax.
Right.
Or they'll put it in an escrow where they take their money.
Right.
When they put the money in the escrow, the bank is investing that money. They are making money on your money.
On top of the mortgage that people are paying along with that, right?
So why not, if you have a mortgage, choose to hold that money, put it into something like even a mutual fund, 3%, where you don't lose money.
Well, it depends. Like I wouldn't personally. I wouldn't want to do that. I want to be free from government interference.
You are losing money, brother. You're giving somebody money.
I understand that, but I have to hedge my bets, right? I have to keep an investment account. I have to keep a savings account. I have to pay what belongs to Caesar, right? Because if you default on property tax, there are a lot of repercussions, that may come your way. So it depends on an individual. How much risk are they willing? Are they investing using that money to invest in a stock that they are certain will give them a good return, so that they can turn around and pay up on that property tax?
Okay, the question therefore, are there some assets out there where they pay very little and you don't lose nothing? Maybe you gain 1.5%, but over a year, that 1.5 might come to 500.
Right, and that's a difference between Canada and the US. I don't think I've I've come across that principle, so to speak, that you can be able to do that and borrow from the money that you're supposed to pay into. When I pay my mortgage, I pay directly to the bank. They take out the property tax from there. They put it in an escrow account, and when that is due, all I get is a letter from the government that such and such amount was paid on your property tax, and I leave it at that. The money that I'm investing, I'm using my own money. If I lose it, it's all on me. I don't have to worry about turning around and paying that on that property tax. So it just depends on what level of risk a person is willing to take. I know of people that have turned around and borrowed against their home because they've found a stock that they're willing to invest in, and they know for certain that they'll have a good return. Right.
Yeah.
I can give you an example of one stock, Freddie Mac and Fannie Mae, right? Because of the price fluctuation.
Yeah, this point, I can't see your names for some reason. This was my next point I was going to. We have a very high deduction to taxes levy, so that we get this bounty of money at the end of the year. We don't owe them.
Right.
But this money, you could have put it into some instrument. I don't know.
Well, and I think Levi and I talked about this previously. I gave an example of Best Buy, right? The electronic product selling retail store. When they put out an ad that they're giving 50% discount on their products, people rush to go and buy. But I can give you a personal example. When I first came to the US 20 years ago, because of my mindset and I had a lot of friends that were going to Form 6, going to the US and going to England. So the first thing they would do is buy a stereo, buy a computer. So that excitement was there when I came here. The first thing I bought was a stereo, and it cost me $400 at the time that Amazon was trading below $5. Right? That stereo right now, it's in my basement. Every time I go in the basement, I look at it and almost cry that why didn't I invest that $400 then? It could have given me so much money.
That's a good point.
You know what I mean? So that's the same principle. If after you file in your taxes, you get that tax refund. Maybe it's $5,000. Invest it. At least take a piece of it and invest it in the stock market. You have a better chance of getting a return on it than you have buying something from Best Buy. And over time, with technology, the way it's moving, all these things become obsolete 5-10 years from now. But then if you invest, the return that you get does not become obsolete.
Not 5-10 years, 6 months from now.
There you go.
Yeah. I know the property tax one could be on the risk side. I know here in Canada also we have what they call a TSA accounts. These are government accounts which have levels of risk. If you are somebody who is very afraid, you are assured 1.5% interest. Right. The government will pay you no matter what. Yeah. In my view, like Levi, I'm thinking of putting some money there instead of giving this guy my money. 3,000 that we pay actually for property tax.
Oh wow.
Yeah.
That's a little bit higher than mine.
Yeah.
Yeah.
So if we the place where we live is maybe they try to chase my people away, so that's why they do things like that. Let me not say this. This is live.
Yeah. So the bottom line again, the purpose of the show is to encourage people to at least do something with their money, right?
Yes.
To invest.
Yeah.
And I always go back to one of the three workers in the parable of the talent. The one that was called foolish. It is not that he lost money. he had the money that was given to him. He didn't lose it. But the master said to him, "You foolish one, why didn't you at least put it somewhere where it could even earn an interest?" So the idea is always put money somewhere where it can earn even a little bit of interest.
Exactly.
I was reading a book, I forget who, it must have been the Rich Guy Poor Dad. He was saying that do not use hard-earned money to buy luxuries. Use money that you've invested and you've gotten a return on to buy luxuries because somebody else is paying for it. And you know, I came across some guy that I asked him how much he spent on his car, and he said something like $500. I was like, "What do you mean $500?" He was like, "Oh, somebody else paid for the car." Until he explained what he meant. He meant he had invested $500, got a good return from that investment, and that's how come he turned around and bought that car. So somebody else paid for it.
Yeah. Yeah, I mean, this is what we're talking about in the African community. Sometimes you might even feel, oh, I'm too old to start investing. When you hear 5 years for you to have a resemblance of a good return, oh, that's too long.
Right.
A lot of us have children, you know, young children,
Right.
where you can invest in. You give a child, is it a bond for 2,000? 10 years from now, whether you will be there or not, it is time we start as the Africans to think about creating wealth and transferring wealth to
Right.
our children. Not in Nkongole fie. Nkongole levy is debt. You know, just leave debt behind for the children. Now, number 2 point, why we even started doing this. When I come here in the diaspora, when I compare to home, the opportunity which surrounds us, opportunity after opportunity, we just walk away. We just walk away. Here in Canada, it is actually the Chinese who are very, very much into the stock, investing in the stock market. But even we Zambians, the Africans, it is easy, people. It is, and once you start, trust me, once you just try and start, Tapwa, you are in. Someone wanted to say something.
There's a question one of your listeners asked, was it last week or the other week, about investment? He asked something to do with 5 years, 10 years, where could he put his money? And the answer was right there in his question. That question was loaded. It was very heavy because it had 5 years and 10 years. Like that listener was thinking long term. So we can call all the stocks we are buying here, but trust me, if you have that vision of 5-10 years, you can almost close your eyes, buy any stock, and you can be almost guaranteed.
Yes.
you will make a profit. There's a saying I heard somewhere. I can't really get the exact words, but it talked about something like we underestimate what the long run can do, and we overestimate what the short term can do. You know, when people put their money in the market, they want to make a quick profit in a week. So they overestimate. They're like, oh, I'll make my money next week, and we underestimate what one.
Brian, I don't know if you can put on the screen. Yeah, go ahead, Brian. Can you put a screen for Ethereum here very quickly as we wind up? They were not doing very well. My holding in the cryptocurrency is Ethereum. Yeah, sorry, Levi, go ahead.
Yeah, pretty much. That's all. As regards Ethereum, I think I got it at 700. I sold it at 14. I should have just waited. It's, to me, patience here is everything. If you can do, you
can come to my school of thought. You can come to my school of thought.
Are you able to show? Yeah, this screen.
Yeah.
So this is even when it's going down now, it has not gone down to where you want to run. You know, my wife is a new investor. I forced her to buy and for the past 2 days, it has been a downward trend. So you can imagine how she's looking. How she's look. But
she thinks you're
again,
not the smartest guy.
no. But what I'm trying to say to her, it's now time to buy more. Time to buy more. You know, I like that. I like the idea of when the stock is going down. One of the guys on YouTube said it is most likely to come back at that level where it is, and even more when it starts to go up.
Right.
So when it goes up, just know the point where it is, it will definitely come back there. So buy. It is time to buy. So my people, Zambians, Africans, it doesn't take much. Robinhood, it's an app. It is right on your phone. The phone looks like this. Your own phone, like that.
Yeah. So you see how you're talking about going up, and so you can imagine my emotions. You know, when it went down, when Netlist went down, and I just kept on holding on to it. You know, when it went up, I was like, maybe this is it. I should just sell, and I kept on holding on to it. Now it's at $2, and every time I look at it, it gives me a smile on my face. Now this I can afford. I can afford to buy bread.
Yeah. No, even my I don't know. Maybe I've diversified just too much for a beginner. Well, I'm learning these things. I have bonds, and I bought bonds, a little bit of bonds. Again, using the tax money you guys talked about.
Right.
I bought bonds. I bought my Ethereum, and then there is that motor company. The bond is doing well. Ethereum not well. So I've learned that diversifying is good. You know, you can't have lose all the way.
Right.
One way you could be losing, the other way you could be having. So again, don't look at the Tesla stock 700. There are some penny stocks out there, which perform very well. You can put in $100 every month. Next week when we come, we'll bring in some guys. Let's bring in each one of us a YouTube recommendation, which we can recommend to the guys watching. They can go and watch that YouTube. Go ahead.
Just the last thought. I think remember the YouTube video that I'd shared with you about this Canadian guy that had opened up his account to the public. He had about $3 million in his account. But the interesting thing for me that kind of jumped out was when that amount, the million, the 2 million, the 3 million, right, was like, oh wow, this is amazing. But if you look at the details of the account, it was $600 here, $1,000 here. He had the loss of maybe $2,000 here. But the overall aggregation of the account was appealing to somebody that is not looking at the details. But when you look onto the details, you see that little money here, little money there adds up.
Yeah.
And this is what Roger is saying. You know, it's not. When you balance out your account, it's not that even for me, I have stocks that are doing. I've lost 50% on it. You know, and that's fine. But then there are others that are making money. So we're not saying when you start doing this, you'll be making money, or life does not
all the time. No.
Life does not work like that.
Yeah. Losing money is part of the stock market.
Game, right?
And that's what a lot of people are scared. Oh, I'm going to lose money. But stock market has made people millionaires. There are a lot of people, not only millionaires, they live well just on the stock market. Maybe you just put in the bonds. Again, maybe you buy in the dividend paying companies. They give you a dividend. Some of the ETFs they are paying here in Canada every month. They give you something, you know? Yeah. So the opportunities, people of God, we have plenty of opportunities which we have here in diaspora. Let's not go back home to Zambia one day and kick ourselves like Brian is kicking himself looking at that stereo. I was in diaspora, I could have done ABCD.
Right.
This one, you can even leave it here. It will be sending back your money into your bank account. You know, you're just gravy like that. Okay, next week we'll be back. We are hoping to find someone who want to share with us investing in real estate.
So I have a lot of people in my circles, but
in your network.
In my network, but the thing
Benson came, but I took long to, and then he dropped, unfortunately. So say hello to him. We saw him. Yeah, go ahead.
I think for most of them is the fear of coming out in public. They have a lot of information to share, but they just don't want to come out in public and share. But we'll find somebody. We'll find somebody.
Yeah. We need some to share in the real estate, some to give us some information on bonds, why buy bonds. Some will come and talk to us about mutual funds. Yeah, the instruments, the opportunities, they are just there, people of God. And you don't need millions to start. Only $100, or someone was saying you can be a millionaire if you just put $5 every day, which works out to be about $150 a month into an interest bearing. So you are adding on that 150, and then the interest also is building, and then 150, and the interest is building. According to that guy's estimate, you can $250,000 at the end of the year. You can make that. I don't know how true, but I'll bring the video next week. Okay, thank you everyone who participated, who was with us. Please, if you want to be part of the show, let me know. If you are my friend on Facebook, inbox me. We'll let you in either next week or anytime. From South Africa, from Kenya, in the UK, and in New Jersey, where Miss Patricia is. And of course, Delaware. Have a good weekend. Let me find Brian's song here. Where is it? Yeah.
Oh yeah, that one put me in the mood. I was like, oh.
Yeah, it's a wonderful song. It's a song sung by Wezi, Zambian Wezi, and titled is it Mama Wangu Amuna Wangu, something like that. Have a good weekend, everyone. Thank you so much.
All right, thank you.
Greatest love, strongest love. Kaya pati ninga kite moyo wanga, kulia iwe moyo wanga, nukukonda wana wanga, baby. Oh baby, you are my joy, baby. You are my strength, baby. You are my everything, baby. You are my happiness, yeah. Yours is the greatest love I've ever known. Your touch is the strongest love I've ever felt.
Okay.